Okay, so with that being said, let's just talk about, kind of what the market's done, what we can expect heading into tomorrow. I mean, some of that was covered kind of in the last question too, because, like I said, now we have this sideways movement, so we're just going to be watching to see, which way this is going to resolve itself. The market, it was oversold. It's kind of consolidating and balancing a bit at this point. But you can see it was quite oversold. Came all the way back down to this big HVN at 84.5, put in a big bounce off of that level, and at this point we're going to watch this, 23 to 25 area. This is pretty important. If this area breaks, the next area to look at is really up towards kind of this, I would say 35 to roughly like 38 is the area really to focus on. And that is still an area where sellers can be active on the way back up. Typically, we don't see, V bottoms in the market. Usually, there's a little bit more consolidation that has to take place, a little bit more kind of tests of support before the market really puts in a bigger turnaround. Again, you have to be ready for the market to do whatever it wants at any point, right? So you have to be prepared, but don't be so locked into your view that you can't change your mind. As someone who's day trading the markets and trading on the day time frame, you have to be willing to flip your bias, sometimes on a, you know, minute by minute basis sometimes, and, other times every hour, every few hours. I mean, whatever the market dictates. So, we're laying out some of these ideas on what the market can do, but if the market does something differently, we're not just going to automatically trade, just the same view. We're going to update our view as the market provides us with more information. But given the information we have right now, if there's resolves to the upside, that 35 to 38 area would come into play, kind of the little, mini balance that we broke down from. Sellers can still be active there because this is a really big push that we had on the downside. So I'm not expecting it just to go straight line up. I think that even if we're going to eventually make our way back up, we're still going to do it in more of a rotational fashion. And we saw that last year, in November, for example, when there was that big down move. You saw even when the market went back up, there were a lot of good short setups along the way. So, even as it's going up, you can still find some good shorts. And, this 36 to 38 zone can actually still be a spot where the market fails. If we go through that, the next major area is going to be up near that 48 to 49 area, the gap fill, and, the top of this balance where we broke down from. And that would be a good short as well. So, those are the main zones, the bigger picture zones that are in play. And Vittorio, you have a question, is the 2048 zone auto fade? Yeah, I mean, as long as the market's not going up there on a trend day type scenario, yeah, it would be a very good automatic fade. Um, even something like 36 to 38 would be pretty decent first time up. Now on the downside, if we break down below this 11 to 14 zone, then I think we are going to go down and revisit this 93, 93 quarter all the way up to about maybe 95, 75, this area right over here. I think that area will very likely get tested. We have an open gap and a naked VPOC over here now, which would then come into play. And then buyers can still be active here on first test. But if we get a downside break, we don't have to stop right over here. We could then actually go down, revisit the lows, and the expectation would be for buyers to be active, at this HVN. And on the downside, below it, you can see we have a major swing low at 61.5. Now that's quite a ways away, so it's not really in focus right now. But it is something to be aware of if the market actually breaks through this high volume area. You can see it's kind of a balanced breakout area for the market here. If it does break below it, then the next major zones would be down near the recent lows around 61, 63. There's a gap, I think, at 65 half. All that stuff would then come into play, and then we can get some pretty major buying off of there, right? But a retest of this area would not be a big deal, and buyers can still be active, right? And then we can actually get even better buying that comes out of it, because at that point, we will have retested the lows and they would have held. So I think there'll be more conviction on the upside after that happens. It'll be a more kind of a healthier move to the upside, as opposed to right now, with this open gap and the area not really well tested. It's kind of a risk point for buyers. Anyone who's buying up here, they're aware of this open gap and the fact that we could head lower. So I think that, that could weigh on the market, if nothing else, just psychologically. So those are really the main ideas for the next few days. We have the employment report out on Friday. That's really the next major catalyst. Not a whole lot going on the econ calendar until then. Tomorrow we have jobless claims, but they're not really a big market mover, especially ahead of the employment report. So tomorrow could be kind of more of the same, similar to today, where the market just kind of consolidates, and then on Friday we get some resolution and some better directional conviction. So right now that's that's the main view for the next several days. All right, guys, that covers the market overview and the analysis and all the questions. Thank you for all the questions, and I hope everyone is trading well. I hope you had a great holiday. Happy New Year, and we will catch up same time next Wednesday. Good night.